You've probably heard everyone that's like invested in the stock market right now, especially in 2022 when the market's going down so much. They probably talk to you and say, you should buy the dip. Tesla's gone down, Amazon's gone down, this is a new low, and everyone's been investing into the dip right now. Now, the concept is like, okay, so this is the market. I'm just going to illustrate this for you. The market's gone up. This was probably 2021, and the market's gone down. It touched up again, went down further, it's gone down further, and it's probably here right now. So your question would be, at this level where it is, you buy the dip. So a lot of the traders were like looking to buy at this level. This could be a possible buy level, and this could be another buy level. They've been buying a dip, they've been buying a dip, and they've been buying, maybe this goes here, you buy another dip. So is that a good ethical, or I would say a wise way to trade? Is like just keep buying the dips as it goes down, because you don't really know, has the market really bottomed yet? And yes, you've got a significantly good price, but if the market's heading into a recession for maybe another year, is this a wise buying opportunity? Instead of buying those dips, what if you were to, the market's gone up, the market's gone down, so the market's trending like that, it's kind of like, and forgive my bad drawings, but say the market's just kind of like plummeted, and now it's deciding to show like, positive signs, okay? So buying it somewhere here when the market's corrected itself. So the way I look at it, and this could be different time frames, okay? So say, for example, you've had 1 candle, 2 candle, 3 candle, and these are all like red candles going down. And I'm just gonna show you the red candles so you can see these are red candles, red candles, red candles. Now, the fifth candle, the way or the right time that I like to buy it is if this candle's higher and this candle's higher. So that's a good positive sign. So basically you're seeing a change in trend in the market, and the market's moving up higher from there. Now the difference is that if you're looking at this on a shorter time frame, it doesn't really apply. This is supposed to be applied only on the weekly time frame or the monthly time frame, where there's enough of room for the market to really show itself. Another important point to keep here is that this could be falling down from right to the top, and it may just be touching a moving average line and heading down here below after that. So that could possibly happen. So the way you would look at buying this candle is this candle should also be up here, and this should be green, and this would be your buying opportunity, not buying your, and buying your, and then again buying your. So I don't know whatever your style is, but by just kind of like kept on buying, yes, you got a good average, and your average would be somewhere around here if you're lucky. But if it actually fell down further and you kept buying, you should really have deep pockets to do that. But in my trading rules, like I prefer not to just keep averaging out on the downside. If you are in profit and you probably bought it at like a sweet spot like 2-3 years ago, and you're still in profits and it's not touched the low of March 2020, then yes, I would say, okay, go ahead and do it. But if it's like a free falling downfall and you keep averaging, you could have to wait for years or maybe a decade if you recover from that, and you'll be just pouring in money. Ecuador did that, where they've been averaging out Bitcoin for like such a long time. Now imagine if you bought Bitcoin when it was at 60 or 65,000, and now it's gone down to 19,000. Okay, so yeah, you've been averaging it out from like 60,000. You probably bought it again at 50,000. You bought it down at 45. You bought it down at like, whatever values you bought it at, even 30,000, which it was for a significant period of time. You would still have averaged this all out to say 45,000. This is the average right now. Just assume your Bitcoin has to go from 19,000 to 45,000 before you can even make a single dollar out of it. However, your portfolio now is, you probably started out at $1 million portfolio just to get started into Bitcoin. But now, by averaging it out, you've got like 10 millions invested into like the entire portfolio, and it's eating up your profit. So that's one of the reasons why I say, don't average on the downside. Wait for the market to really turn on you, show you a positive direction, and then get into the market. So I hope this was helpful. Gives you a little different perspective from the traditional way of what you would hear into, like the markets right now on CNBC, Bloomberg. People or these portfolio managers always talking about shorting the market. So with that, I'll see you in another video, and I wish you all the best in your trading journey. Be successful, come out a stronger and a wiser trader.